Hi guys.
Hi. OMG, our young entrepreneur. Yes, been a while.
Well, so how's your life going?
My business not going well. My business and academic also not going well because of the cost increase and my profit is little lah. It is much easier if someone can help us.
I have an idea. Why don't we form a trade association?
Association?
Yes.
What is that?
Firstly, the definition of trade association. A trade association is a group formed by businesses or individuals from the same industry or trade. Its main purpose is to promote, support and protect the interests of its members. The association works together to set industry standards, talk to the government about policies, organize events and provide services like training and market research. Trade associations are usually non-profit organizations that focus on helping their industry grow and improve. Next, for resident status. For tax purposes, the resident status of a trade association depends on where it is managed and controlled. For example, in Malaysia, a trade association is considered a resident if its management and control are exercised within Malaysia. Usually, this is determined by the location of board meetings or the main office. Resident trade association may enjoy specific exemption under certain provision of Malaysian tax law that are used solely for the benefit of their members and for the promotion of their trade. For an organization to be recognized as a trade association, certain conditions must be met. First, they must be membership based that consists of members who share a common trade, profession or industry. Second, they implement the non-profit motives as the purpose should not be profit generation but promotion of trade or industry. Third, it must represent role as they act as a collective voice for the industry they engage with regulators and the government. Fourth, the activities must be aligned with trade interests such as providing services for research and education that are beneficial to its members. Lastly, it must be a formal organization as they must legally register with clear institution, objectives and governance structures. Last but not least, an example of a trade association is the Malaysian Palm Oil Association (MPOA), which represents the interests of plantation companies in Malaysia's palm oil industry. MPOA engage with stakeholders, provide research on sustainable practices and lobbies for favorable policies to support the growth and sustainability of Malaysian palm oil sector. Another global example is the American Bankers Association (ABA) in the United States. They are representing the banking sector.
Next, I want to explain about the tax treatment of income and expenditure of a trade association. First is, any income earned by a trade association, such as from a business activity, rental, property and other income class defined under Section 4 of the ITA is taxed just like any other person. This means the government will calculate tax on the money it earned just like how they tax company or individuals. However, in some cases, trade association can get a tax exemption if they meet a certain condition, like using the money only for the benefit of their members. Second is a resident trade association in Malaysia is considered to have a business source for any revenue like income even if it doesn't come from a traditional business activity. For example, a resident trade association in Malaysia collect a membership fee from its member and also earn a rental income by renting out part of its office building. The calendar year is used as the basis period for calculating this deemed business income. Thirdly, any outgoing or expenditure directly linked to the revenue from the deemed business source is treated as incurred in producing gross income. Any costs or expenses that are directly related to the income earned from the business source can be deducted when calculating taxable income. Some expenses may be disallowed under Section 39 of the ITA. Next is gross income. Gross income is the total income a person or organization earn before deducting any expenses. For a trade association, this includes all the money it receives, like a membership, fees, rental income, business income, interest or dividend. Gross income is to find allocation for common expenses. This will be explained more by next person. For chargeable income, start with a total income, gross income. We minus with direct expenses, expenses directly related to income. Minus with allocate common expenses, that share expenses like admin and salaries. And then we get adjusted income. We minus with capital allowance, tax depreciation. We get statutory business income, and we add other income like a seminar, rental, and we minus with exempted income like a membership if exempted, and then final result is a chargeable income. This is a taxable.
Now, let's talk about special donation in the context of trade association. There are two types of donation we need to discuss: capital receipt and revenue receipt. First, if a trade association receives special donation specifically for long-term purpose such as renovation, repair, or improvement of building or facility, this is considered a capital receipt. Since the donation is meant to upgrade or improve the association's assets, the expenditure incurred is classified as capital expenditure. This type of income is not subject to tax because it is treated as capital in nature. It does not relate to the association's regular business income. On the hand, if the donation is general in nature like anniversary or contribution for members, it falls under revenue receipt. This means the donation support the day-to-day running of the association, not for long-term improvement. In this case, the expenditure incurred will be revenue expenditure, and this type of income is the taxable. So, in summary, if donation is for long-term improvement, it is capital and not taxable. If it's general, it's revenue and taxable. Understanding is important to make sure we classify the income and expenses correctly for tax purpose. Okay, next, capital allowance. Capital allowance is a tax deduction given for the cost of asset used in the daily operation of a business, such as machinery, office equipment, or computers. The asset must be used for business purpose, and the allowance is claimed over several years based on rates set by the tax law. However, starting from year estimate 2020, this is a special rule for low value assets. If a business purchases small asset not exceeding 2,000 each and the total does not exceed 20,000, they are eligible for 100% capital allowance in the same year. Okay, for the example, if a trade association buys 6 calculators costing 1,500, each the total is 9,000. Since each item is under 20,000 and the total is below 20,000, the full amount is deductible. This helps reduce the tax and encourage small investment in equipment.
Now we are going to look at the income tax exemption of the trade association. So, the statutory business income that derived from the member subscription fee will be exempted, but the entrance fee will remain taxable. So, what is member subscription fee and entrance fee? Member subscription fee is an amount of money that are paid regularly to become a member of an organization, while the entrance fee is a sum of money that need to be paid to join or enter an organization. To calculate the statutory income, the gross income of the member subscription fee will be deducted from the revenue expenses and the capital allowance. A portion of common expenses and capital allowance will be restricted on the proportion of gross income basis. So, we will use the formula A or D will be multiplied by B and divided by C. So, from the formula above, A is actually a common revenue expenses, B is a member subscription fee, C is a business income, while D is the amount of common capital allowance. Let me show the illustration for the income tax exemption in the above calculation of tax payable for the year assessment 2021. First, member subscription fees of 1 million will be less the common expenses 100,000 to get the adjusted income. The working with common expenses of 200,000 that consists of employees' remuneration, transport and stationery will be multiplied with 1 million of member subscription fees and divided by the total business income of 2 million. Next, the amount of adjusted income 900,000 will deduct the common capital allowance 250,000. So, the calculation also shown in the working which capital allowance of 500,000 will be multiplied by the member subscription fees of 1 million and divided by 2 million gross business income. The statutory income 650,000 is the amount that will be exempted.
Next is for tax rate for trade association. Since tax trade association fall within the ambit for 40%, so the tax rate will be the same as individual. Scale rate is used for the resident while flat rate is used by non-resident.
Oh, I know about this. The registration is very simple. You just need to fill up this form.
Really? What type of form?
This form.
Next is covering important tax administration requirement for organization registered as society or trade union in Malaysia. Let's begin with the fundamental registration process. First and foremost, organization must be properly registered under either the Society Act of 1916 or as a company limited by guarantee under the Company Act of 2016. This establishes your legal standing and determines which set of regulation you need to follow. Once registered, there are ongoing compliance requirements. Most importantly, you must submit your annual income tax return using the TF form. The deadline for the submission is June 30 of the following year. For example, your 2024 tax return will be due by June 13, 2025. The Income Tax Act of 1967, specifically subsection 112 clause 3, imposes penalty for late submission. This penalty can be significant, so I strongly recommend using the convenient e-filing system known as EDF, which allows for online submission and help ensure you meet the deadline. Now, let's discuss the documentation needed for proper registration and compliance. The Registrar of Society requires several key documents. First, you must provide complete copy of your society constitution. This is your governing document and outline your organization purpose and operating procedure. Second, you need to submit a comprehensive list of all office bearers. These include their full name, current address, and occupation. Importantly, you must also include supporting documents, specifically an IRB stamp duty, paid tenancy agreement that verify your organization official address. Third, prepare a complete membership roster with the same detail, name, address, and occupation of all members. Fourth, include the official minute from the meeting where the current office bearer will elected. This minute should be proper, formatted, and signed. Finally, be prepared to provide any additional document that the Registrar of Society may specifically request. Requirement can vary case by case. Next, let's go through to trade union. A crucial benefit for properly registered trade union is that certain types of income are exempt for taxation. Specifically, any income that is not derived from business activity qualify for this exemption. Also, remember that this exemption specifically apply to non-business income. Any income derived from business activity will still be subject to a normal taxation.
Oh. So, what we are waiting for? Let's register now.
Let's go.
Go.